Good morning. Welcome everyone to Admiral Markets. My name is Chris. Thanks for joining us today, the 17th of June. We'll be taking a look at the market as always. Of course, first of all, this PowerPoint though, explaining certain things like this disclaimer that the online material here is developed for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. Please, by continuing watching this webinar, you agree with the disclaimer and the content mentioned here and on the website. And we do thank you for your attention. Alrighty, so today we're going to be talking about range trading, not the most usual topic that we discuss, but it's always interesting to look at the charts and price from a different perspective. Even for range trading, we can still use the same checklist like we always do, and probably you're familiar with that. If not, let me know. If you're here maybe for the first or second time, let me know so that I have an idea if we have more regular viewers or maybe this is new to you. But usually we look at the finding the trend. Of course, for a range, we don't want a trend. We want the lack of trend. That's the ideal situation for a range trade. Then we're looking for an opportunity, which could be a top or bottom. For the range trading, we could check if there are filters. Price, for instance, let's see what could be a filter in this case for range trading. Price showing a lot of momentum, for instance, could be something that you want to be careful of. It could lead to a breakout out of that range. That would not be good. A trigger could be a candlestick pattern, wick, for instance, or candlestick pattern in general at the top or bottom of a range. And the entry, well, there are various entries always, but it could be the retracement of the wick or the break of the lower high of that wick as a confirmation. So before we take a look at the charts, let's take a look at this calendar, see what's going on. We have pound in 1 hour 41 as the standard pound news. We also have German ZEW economic sentiment. Later today we have building permits and U.S. core CPI. Now, out of curiosity, I'm going to take a look at the whole week, if you don't mind. Just give me a second. We got pound MPC meeting minutes tomorrow. We have FOMC statement tomorrow, later tomorrow, and Yellen speaking. Also 1.5 days from now. Thursday, pound retail sales. Friday, CAD. Not a lot of things, I would say, but tomorrow is a heavy day. Alrighty, let's take a look at the charts together. Now, I want to add that, first of all, I should add that I have not looked at the charts yesterday too much. So bear with me as I walk through the charts maybe for the second time, because I came home a bit later than expected. I had some traveling, big travel delays. Fortunately, I was supposed to come home earlier Monday, but came home so late that it didn't make sense anymore to even look at the charts. So just that you're aware of that. So in any case, the euro dollar, 1 hour chart, it's a bit of a struggle, isn't it? I mean, we're looking for ranges. Looks more, it could be a range in the sense that we are going flat. It's not a very established range yet. We had a shooting star here. That could have been an interesting signal. That happened about 6 hours ago, though, more the beginning Asian or late New York maybe. But that's behind us. At the moment, price seems to be boxing in between a weekly and daily pivot, rather at the top of the range with prior momentum to it. So I would be not too enthused to trade it to the downside because of this momentum. We're not even at the top of a range. I mean, this shooting star was a clear example of what could be used for range trading, where you get a wick like that at an extreme, but we don't have that now. So I would be not looking at this as a range potential at the moment. No, not from this hourly perspective. But we can still look at the euro dollar and see if it's just interesting to trade maybe a reversal or a breakout or whatever. We can still analyze it if you don't mind. We can look for range trades on other pairs. But the daily is, I would say, looking at still at a bouncing spot. I mean, it's taking certainly long for the bounce to happen, but we still have this 134.75 bottom here in play. We did have a big engulfing daily candle that happened at that 135 exact round number. All that happened in the meantime, though, was 1, 2, 3, 4 down days that still didn't break this bottom. Then we had 1, 2, 3 sideways days as well, so it's really not much of a direction in this regard. All this price action contained between the 136.70 and 135. However, yesterday was a bullish day, so if anything, from this perspective, a reversal trade probably seems the most interesting to me. I don't know if you agree, but you could say, nah, I'm not interested in it at all. Then I fully understand. It's not that interesting in general. But let me say it this way, if I had to choose one side, probably like the bulls' chances a bit more, just because price is close to support and hasn't broken that bottom as yet. And I think that therefore there's always a decent chance of getting some upside up to that monthly pivot and weekly R2, for instance. So in that regard, a stop loss below yesterday's low, below 135.10, and an entry about halfway that daily candle, 135.54 maybe, or 50, where price was bouncing off actually just recently, right, about here, but off of that daily pivot. Yeah, that's something that could make sense. If we look at it from this hourly perspective, you know, if price were to get to the daily S1, that would even be a better discount for bulls because they would get it even at a cheaper, let me see this way, at a lower level, right, 135.30. That would be probably a good long with the stop loss there. I think that would be worth the risk, let me say it this way. So that would be more of a reversal idea, however. Alrighty. Otherwise, not sure if I have anything to add. We have L4 also with the daily S1 at the same spot, giving some confluence. We have a ATR projection low at the same level at 135.30. You know, those are all extra things that confirm that 135.30 could be a good bouncing spot. You know, it doesn't necessarily mean that one has to trade it with an entry order. One could wait for price to get there and show price action. Let price action speak. If there is a big wick at that level, that could be the confirmation, right, that makes sense to wait for and trade that confirmation wick after it bounces off that level. That is another way of doing that. Otherwise, if price were not to get that low but starts bouncing to the upside, obviously we can wait for the H3 to be broken and wait for a hook back and wait for the bounce up to 136.20, for instance. So the sweet spot will be from the blue line up to the DR2 there, right? So that would be the alternative. Let it break, let it hook back, and get this space between blue and R2. So that's the things I'm looking for. I'm not sure if I missed anything, but if you want to add something, let me know. 4-hour price action is not looking that spectacular, though. So the upside, shooting star, engulfing. So maybe we can make that dip to the daily S1. Day chart looks a bit more bullish, though, as we said. Look at price action at least. Alrighty, let's move over to the pound. Pound is a different situation because it actually had a tremendous upward momentum. So this too is not a good environment for range trading. So I would skip this one for range trading, very simply because of the momentum that we've seen last week right in front of us, this part. So it's going to be either reversal or trend potential today. So let's still discuss it if you don't mind. Looking at this particular momentum, obviously we can only conclude that upside continuation is interesting. Looking at the strong AO reading, that is always the most beneficial. However, there is some structure here on the pound dollar that makes the upside also less attractive than usual. One of those things I would say is the fact that price is very close to a weak monthly resistance spot. Right there, 170.40 is a tremendous big level because price hasn't been that high since October 2008, which basically means it's getting close to 6 years, isn't it? So obviously, price doesn't mean that price cannot break through that level. It does mean that it is a big level, and price could respect it. And we'll have to see if price has enough momentum and power to push through that level. So we cannot ignore it like it isn't important, obviously. Weekly chart is looking bullish, and this is looking like a bull flag on the daily chart within a strong uptrend. If you look at the weekly moving averages, they're still being torn apart. This is looking like a tremendous impulse, still continuing actually. And this downside looking like a bull flag, in fact, right? Doesn't mean though that the bull flag automatically translates into guaranteed follow through. But it has broken for our chart. So all these moving averages are bullishly aligned. There is definitely a big momentum, definitely a big trend to the upside, and this was a good break of this channel, this downward channel. And that trade is doing well. Now the question is, at what point could we expect continuation? Is it now, or do we make a retracement first and then a bounce to the upside? And normally I would have a bit more stronger opinion on this, but now I don't. Because it's so close to this resistance here, this one, and a bigger top, I'm a bit scared and leery of the upside potential, despite this big momentum. I'm also not too fan of this downside retracement because of the big momentum to the upside. So I'm caught a bit in two worlds, in my opinion. So obviously this is looking bullish, but it could have struggles either way. So ironically enough, I'm not too big a fan of it, despite normally speaking I would, because it has a lot of momentum. I like those situations. Let's see, on the 15-minute chart, we are at the daily pivot point. With the pound news, I would just be cautious at the moment. Yeah. Oh, Eve is saying the same. We'll see in an hour. Exactly. I think we can just say let's wait and see and talk about it tomorrow again, because I have to reanalyze it after that news event. What could happen, I'll just give you some scenarios, is spike down and a bounce, or a spike up, depending on the pound news, spike up, for instance, retracement, and then a continuation spike. Those are all things. Those two would seem the most likely today. But let's see what the pound news does, if anything at all. However, if price does make a retracement, I would think that there's still plenty of support down below. However, waiting for some confirmation is always is good. AudioSD just made an inverted hammer at the daily S2 and the weekly S1. So there was a big move throughout the Asian session from the daily pivot and weekly pivot. And it seems to have traveled quite a distance in those few hours after the shooting star, two shooting stars. Let's put it a bit in perspective. Yeah, looking like a very bearish scenario at the moment. 2 days ago we had a Harami. Yesterday was a bearish candle. So there's obviously a lot of bearish momentum or sentiment, price action, sorry, the last 2 days. Today is getting that follow through. Now, in general, this does look quite rangy, in fact, if you look at the daily chart. I mean, price, after it peaked here, has just gone sideways like that. So it looks like we're at the top of our range. Therefore, the downside potential back to the bottom of that range might be something worth looking at. So let's take a look at the weekly. Moving averages are quite flat too. Now for the moment, the price is closer to a bouncing spot than a resistance spot because we made a lot of downside already. So a bounce here back to resistance and then a move back to the monthly / to the bottom of that range is something that I find quite interesting here, this potential. Obviously that downside potential, if you do get a rejection at the daily and monthly back to the bottom of that range, is kind of a spot on the chart that has the most space within this ranging environment. The upside here, although maybe probable, we can research that in a second. I would think that the space until we bump into resistance is quite limited, but still might be worth it. So we can review both. Here certainly there's a big confluence of pivot points. So if price gets back up to there, if it does, then it would seem a decent level to look for rejection risk confirmations that price is struggling, and then we can look maybe for some downside there. Until price gets there, though, we still have the potential for a bounce. So why is that? Because we have an inverted hammer at just below, or right at the close to that projection low of the day, plus the daily S2. We already passed L5. So there's really no, I mean, except the daily S3, but we're at the weekly S1, there's really no level to aim for to the downside. There's very limited space and a lot of risk overhead above us. So downside doesn't make sense. The upside could, as a reversal trade, back to the daily and weekly pivots, for instance. Let's see. 15-minute chart. You know, there's a lot of momentum to the downside here. Look at those moving averages. They're still gapping. And in fact, price is still moving down. Last 5-minute chart just had a very bearish candle there. So if upside were to happen, I would need to see price make a bit of a struggle here. Make some upside momentum, make some consolidation, and then break out. Make kind of like an inverted head and shoulders. Then it would be interesting. Otherwise, it's still too early. Downside is out of question, though, just because it doesn't line up. Downside would make sense if price were to go back to this resistance, or at least back to here, and then the AO goes back to the zero line, and you start breaking out to the downside again. Let's see. I wasn't aware of that actually. Maybe was it mentioned here? Oh, sorry. You're right. It was a medium tag news. I didn't see it. Yeah, we do have. Eve is saying we do have the RBA governor speaking in 7 hours. Yeah. So that's something to be aware of if you're trading the Aussie. It's a good one. So that could always influence and impact a pair, definitely. Alrighty, the Kiwi. Let me put a new template on. 1 second. Well, there's a big momentum to the upside on this 4-hour chart, but price is going sideways on this hourly. So there is a bit of a range on the hourly, but it looks more like a triangle, contracting triangle within a upside momentum that we had last week. Part of it fueled by the interest rate increase, as we can see. So it's not a range that seems very interesting to me. It is a range on the hourly in the sense, well, it's more like a triangle. It's more like a chart pattern. So, but considering the upside momentum, I would not be particularly fond of it, unless trying to trade the bottom of that triangle for upside. That would be a better solution. So one thing one could think of is looking for price to get to the S2, sorry, if it gets there. Could be a good bouncing spot. Even now, it could be a good bouncing spot. You had already candlestick patterns at the S1, in fact, 2-3 hours ago. Very bullish weekly candle. The question always remains now, will that candle get retraced about halfway, for instance, or are we going to break out immediately? And yeah, that's something we never know. But obviously you can see with such a strong bullish candle, the potential of some bounce at about halfway, 85.70, 85.80, I guess. Let's put a fib on it. Is a decent probability. Close the gap maybe as well. So that's something to look for. Whether price will do that now or later, that remains to be seen. Obviously, if price does get there, it'll be a good bouncing spot, but it seems unlikely today because the daily S3 is right on the weekly pivot. So that's the 38.2 fib. So I don't think price will get there today, but today probably the max range will be here. I wouldn't want to trade it to there though, because of the strong momentum. But if price does get there, then it could be an interesting confluence of day S3, weekly pivot, and 38.2. If price doesn't get there, then probably price is going to be breaking out to the upside or going sideways. The upside space seems a bit limited. But yeah, because the H3, H5 are so close on each other. But if price were to break through, pull back, and go, maybe some space, just like the odd USD. But sorry, no, pound USD. I think it was. Yeah, but not a ton of space here when we do have a breakout to the upside. So it's going to be difficult to trade it, but it is worth keeping an eye on the break, pull back, and go. Just need a bit of just need to check if there's indeed sufficient space to trade that breakout and pull back. Alrighty. Dollar CAD, let's take a look if there's a range. Maybe on the daily. Let me get rid of these short-term moving averages 1 second. Yeah. Kinda. Looks more like a contracting wedge here. Or maybe even a descending wedge. Four-hour looks very bearish. And I wouldn't be surprised if price would be able to push through that contracting wedge to the bottom at current speed. But you never know. That's why the support level is there. And that could always provide a bouncing spot. There could be a potential trade back to the top of that wedge. That could be a range trade, in fact. So that's a potential. Let's take a look at what kind of conditions might make that interesting. Problem is we have that weekly and monthly pivots right smack in the middle of that range. Doesn't make it that appealing. So I would filter that one out just because of that. That's not really an interesting scenario here. No. Unless actually price shows some price action pattern here, like that shooting star at the weekly, for instance, that we had a few hours ago. That could be interesting. I'm not sure if it will happen again, though. Otherwise, I don't see much on the dollar CAD. Vigantis is talking about the New Zealand dollar, and yeah, that was indeed the Kiwi news. Yeah, correct. Didn't mention it, but or I thought it did, but anyhow, it doesn't matter. It is because of the Kiwi news. So that gap is because of the interest rate. Dollar yen. Let's take a look. Well, dollar yen in the bigger picture is ranging indeed. If you look at the daily chart, daily chart. But it's not ranging in a very precise manner. It's actually more oscillating up and down, not within a clear boundaries, not within clear, reasonable, clearly tops and bottoms. Therefore, I'm reluctant to say it's a very good range, but still something tradable. But I wouldn't say a range. This is more looking like momentum here, in fact, at a slow downside. So right here. So if anything, it's more looking like upward momentum with a bull flag. Break of that bull flag to the upside could be interesting. A break to the downside could be interesting too. So both breakouts are possible. Price is actually right in the middle of weekly, with weekly pivot above it, daily and monthly below it. So it's stuck in the middle here. So I would let price try to box itself out of one of those, out of that extreme, or not extreme, actually out of that 2-1 extreme before getting interested, right? Because otherwise price can just go back and forth and bounce between these two levels. So breakout scenario maybe, although limited space if you look at the ATR. So not that appealing, the dollar yen. Let's see if we can find better ones. I think the odd USD was a better one, more interesting one. Eventually, still continuing to the downside. But as I said, for me, it was at too far of a position to trade it. Which one? The euro dollar I think looked more interesting as well, and the Aussie. I'll keep an eye on the pound too, but the dollar yen doesn't seem that great. Adrian is saying the best examples of ranges on CAD yen and New Zealand yen. So let's take a look. Thanks for that contribution. That's much appreciated. Let's take a look at the New Zealand yen. It's the first one I bump into. Yeah, that's actually a very good example. It's a bit tight though. Yeah. It's for me, it would be too tight to trade it. But if you like entry orders, it could be good. If you want to wait for confirmations, this one is too tight because before you get some signal, it's gone. But this is a good example indeed. I myself am not a big range trader, so something like this you would not see me trade. But if you're more interested in range trades, then you'll probably find us a good environment, indeed. Too tight in price, indeed, for me, because I'm more of a if I would trade it, it's more of a confirmation of one extreme or another. So if you get confirmation here, it eats up a lot of that real estate. It's very slow price action indeed. If I look at the strength of the New Zealand yen upside on the 4-hour, then a potential bull flag or continuation up is possible, but let's see 1 second. That might only happen if a price actually gets a bounce first, maybe at the weekly here and S2, L5, or here S3. Could be bouncing spots. Roughly at the 88, which is the 38.2 fib, or the 87.85, which is the 50 fib. Those could be bouncing spots for upside. So that could be something interesting potentially, but I would wait for confirmation. Let's take a look at CAD yen. Yeah, that's actually a classical example indeed. Nice one, Adrian. This is looking slightly maybe like an ascending wedge, but very slight accent, not much. All in all, it's really, really, really choppy daily chart as well. Look at that. Very close price action here. Tight price action from mid-April, especially the last few weeks, just going sideways. Not sure why all these arrows are here. 1 second, let me get rid of that. It's a bit annoying. Okay, that's better. So, yeah, the 4-hour is a classical one. Ups and downs. We had a shooting star on the 4-hour chart. And we had a Harami, I think, here. Yep, Harami. So, looks like there could be a decent move back to the bottom on the CAD yen. Now, so far, every time we had a bounce off the top, price has made a hook back here, here, and even here, although it broke the previous top. So something like that could happen before we make that move to the bottom. So that's what I would be looking for. Probably the second hook back here could be an interesting downside. And if we get some signal of that bearishness, like these wicks here, and wicks here, and here, that could be a way. Be careful, though, of using a stop loss too close to the top, because especially in that environment, you could see some small breaches of those tops. Let's see how much. About 4 or 5 pips, so be careful of that. Alrighty. So those are good examples. Thanks for that, Yves. Great job. This one is the most interesting, I would say, compared to the New Zealand yen. Any other pairs that you might be interested in? Otherwise, I'll continue maybe with the euro odd. Oh, sorry, not. Yeah, it was Adrian. Sorry for that. Yeah, if you put your stop loss at, let's say, 94 5 pips above this top, 94.10, and you get entry at 93.97. It could be around 13 pips indeed, for about 37. Yeah, a 3-to-1 might be possible. Although you would have to use a bit tighter stop loss. A 2-to-1 is easy. I mean, it's not easy, but is achievable with even a spacious stop loss. So it's a nice zone. I agree. Yep. Any other pairs you have in mind? The Euro is the opposite of a trending, or sorry, range environment mode. But it has the same problem as the Aussie. It just has traveled quite a distance already. So that does provide a bit of a problem with the trading it with the momentum, because we just reached our ATR projected high. So that's a bit of an issue, and therefore I would skip it. One could maybe look for reversals, but that I would look for clear spot where we have multiple confluence of a reversal potential. That isn't here. It could be at the daily R3 and the weekly R1. If we get a rejection wick at that level, then it might be worth a reversal trade setup at that level on the Euro odd, for instance. That same could be true for the odd USD. I'm not sure. Let me take a look. Odd USD still marching forwards. No clear confluence there, but the Euro odd does. So yeah, all these Aussies are breaking to quite high, quite extremes on the Aussie strength side. Sorry, opposite. Sorry, Aussie weakness side. That makes those a bit difficult for today, or for the moment at least. Euro yen. In a way, it's similar to the CAD and the New Zealand yen, because it too, to a certain degree, is bouncing up and down. So pound yen too? No, pound yen is a bit different, because pound yen had the spike last week. So that impacts the pound yen too. So that would be a different scenario. But the euro yen has that same too. So not as clear of a range as the CAD yen indeed, though. And price action is not looking that great. Moving averages are flat, and it's right in the middle of the weekly and daily pivot point. Doesn't look that great. Pound yen, let's take a look. Not the easiest either. We are very close to, we are having bullish price action the last 2 weeks, but it's just so close to 173 here, what is it, 60, 50 top, that it's difficult to trade it to the upside with that resistance close by. It's not much of a ranging environment either. It's more like an ascending wedge. Well, the same story, I guess. Because of this momentum, it is interesting to trade to the upside, just like the pound dollar. However, it too is close to resistance, so that makes it problematic. Downside, it could be a reversal potential indeed, but because of this strong momentum, that makes the downside reversal also not so interesting. So both sides are not, like the pound dollar, not that great for me, in my opinion. A bounce off of this confluence at weekly pivot, DS2L5, could maybe be the most interesting, in fact. This is the pound CAD. I'm curious how it looks like. But we do also have momentum here. Daily chart is showing a bit of a shooting star though. Well, I mean, I could, there's always something to find, but it doesn't really look that interesting. The upside, though, seems more prevalent, obviously, because of the momentum to the upside. Same story like all the pounds, in a way. It, too, is pretty close to some resistance as well regarding the trend line, this top here. So that, too, is a bit of a tough spot. So just like the other pounds, so I would say it's about the same as the others. The EuroCAD has a lot of downside momentum. But on the hourly, everything is quite flat. It's not a bad example of a range on the hourly. Considering the 4-hour having so much downward momentum, it's a bit early. 4-hour is flattening though, and price is stuck between the pivots, so there could be a bit of a range environment at the moment. So in that regard, looking for bounces at the S1 and R1 might be interesting here regarding range trading on the EuroCAD. Now, one of the ways you can look for ranges is obviously just the chart pattern itself, but moving averages help too, because if they're flat, then there's not, there's not any momentum. ATR low, for instance, could also be an indication of lack of movement in a way, so it could be good for a range. But most of all, tops and bottoms, of course, are important. The oscillator is good to have because usually speaking in a range environment, the stochastics, I should say, because that would provide more value on the tops and bottoms. Classical usage of that indicator, as most of you know. So this Euro New Zealand, I don't know, it's showing like this New Zealand dollar that same story I would say, opposite of the Aussie, where the Aussie is actually having too much movement. The Kiwi doesn't have any movement, so it's making it a bit difficult because of that. All in all, it doesn't really look like a fantastic market so far, in my humble opinion. The CAD Yen range trade seems to be the best, or the Aussie reversal trade, or the Aussie continuation trade, but at a better spot. The pound, I'm still interested to keep an eye on that, and whether Euro can get a bounce or not. But so far, that's been it, I think. Pound Swissy here. Same spike on the pound. Yeah, that doesn't. I'm not really enthusiastic at the moment. So that's about it. I guess these pairs that I mentioned maybe are things that I'll keep an eye on. But let's see what the pound news brings. And tomorrow we have FOMC, so we'll have to see. Today could be still good for intraday trading. Tomorrow might be a bit quieter because of that, because of these news events. We'll have to see how price responds throughout the day. There could be some opportunities based on the future price action in a couple of next hours. What I tend to do is look at, not specifically range trading now, just in general, is wait for price action signals at pivot points and use that in conjunction with moving averages to get a a read on price. At the oscillator, for instance, that gives already plenty of, potential of trade setups throughout the day. At the moment, it doesn't look that great, but there are a few things to look for. Adrian is asking, how did it went for you with the EuroCAD trade you took last Thursday? I had a small profit on that one. That's a good question, Adrian. I did talk about it in the Pro Learning Lab that evening, but some of you probably were not there. Let's take a look at that. That was a momentum trade. And yeah, exactly, I can imagine. So for those that weren't there, let's go through it. It's a good moment to do it because it's from my feeling, we've discussed all that I wanted to discuss, I would say, because it doesn't look that great. Let's see, I took it right on this wick here. Let me make it a bit bigger. Where is it? There it is. We had this breakout candle. We had 1 hour strong downside momentum, 50-minute also gapping down. As you can see, the moving averages are increasing. Also, this 50-minute candle had a strong close that broke. The candle broke this fractal here on the left. Let me take away these lines, or let me just put a new template. 1 second. Yeah, here. This was the breakout candle with a strong close close to the low. The moving averages were all aligned on 1 hour 50. We broke this fractal, and so all those things were aligned. Plus, we were at the L3 at the time. Roughly speaking, we had space to the downside. It looked like we had space. So took the entry about here, just a small retracement of this this candle. So that was a bonus pip or two, because the entry could have been done, for instance, at the close of that candle. And price then made a downside and continuation. Now, if you used a very tight trail stop loss, one could have even exited at this bullish candle. In that case, only 5 to 7 pips was made on original risk of about 26. So that's not a lot. Still a profitable trade, but not a lot of profit. If you didn't exit there and you were a bit more patient, then I would have exited later on. If you waited for the 50-minute fractal, then it would have been a small loss, in fact, because the exit would have happened all the way here, there, using this fractal. So that was a long, tedious trade in that case. But I was looking for a quick trade. So if you followed what I was saying, you wouldn't have exited here. You wouldn't have trail stopped the 50-minute fractals. I was using the moving averages at the time. Let's take a look. Yeah, that's here. So here we had a crossover. Well, that basically is a very tight trail stop loss. But if it's a bearish candle like that, I tend to give it still a bit more time. Here, the things were different because we already had a bullish engulfing twin. Then we got the crossover. Not only that, but this was a bullish candle. So that was the exit spot because of those factors. First of all, we had the crossover of the 2 and the 4. If you really want a tight trail, plus a bullish close above the 2. So that was the signal that the bulls were more in control than the bears on a very microscopic level, let me say it this way. So with that exit, small profit was made of, well, what could it be? About 15 pips, I would say. Or maybe more, 13 in fact. So 13 versus 26 for risk, which is about half of the risk. So not a tremendous amount, but what can you do? The market just didn't continue, so often traders refer to the statement "want what the market wants." This is what the market kind of did, and this is what the market gave. So we could want more, but if the market doesn't give it, then what can we do, right? So that's the good thing about tight trailing stop loss. And indeed, you see at that point, you do get that bigger retracement, doesn't it? And the market really didn't go anywhere after that. So it was an ideal exit. Now, some of you use this one. Okay, I can imagine it was a crossover, but with crossovers that have this kind of bump in them, sometimes you do get a follow through, especially if it's a bearish close like that. Then in that case, moving the trail stop loss to break even could be another solution, and seeing if you get one more leg, and then closing it out here. I didn't have it didn't reach my TP because I was hoping for a longer run down than just this. So it made a decent move down, didn't make the down move I was hoping for, but still gave profit. And you can see that the momentum downwards did at least get some follow through, right? Enough not to lose and make some profit. This tighter trail stop loss tightens the R2R, indeed, definitely. It cuts winners a bit shorter, but it increases the win percentage because you're not exposing yourself to bigger retracements. And in this case, yeah, you would have had a minus 0.5 loss if you don't use the tighter but the looser one instead of plus 0.5. So this, you know, nothing is, there's no right or wrong. It's just what you prefer, indeed. But this is the consequence. You would have a lower R2R, so you need a more wins, indeed. So one of those things that you might want to think of when trading this is an earlier entry, because this was a bit on the late side relative to the whole move. But in this case, still not bad. One of those early entries could be this one, for instance, engulfing twin, and the close below the moving averages, and the moving average is bearish. Primarily the hourly was very bearish. So an entry there, right here, would probably help a lot with the R2Rs that are on the lower side if you're using a tighter trail stop loss. Because the entry is, again, 8 pips better. So let's take a look. So not only that, but the stop loss is tighter, of course. So you're looking more at a 20-ish stop loss and a 20. It's more like a 1-to-1 gain instead of 0.5. So obviously you can see by taking the early entry instead of the fractal break entry, taking the engulfing twins there, well, obviously you just severely, you doubled your reward there. So an earlier entry, if prudent regarding the moving averages, helps with that. I would go very, relatively very tight, spread plus a pip. Sometimes even using the moving averages, but they need to have a decent angle. This isn't, I mean, they're bearishly aligned, but they're flat, so I wouldn't use the moving averages in this case. No. But this is just, of course, using a tight exit. The tight exit just is nice, especially if you want to get a quick trade, time-wise, if you can't monitor your trade that long, and if you don't want to live through retracements that don't go anywhere. Sometimes you get a retracement and follow through. This is a classical example where you get retracement, but you don't get any follow to the downside. In fact, the retracement turns into a bigger retracement. And the market actually It's funny enough, although the bears were in control on this downside, the bears never got back control, never. Right after this bullish bounce here, where we would have exited with a tight trailing stop loss, you might, as a bear holding this short, might think, okay, the bears hopefully will get control. Hopefully they'll get control. They never did, and the bulls took it away. And no matter where your trailing stop loss was, you got taken out for a loss. Not that there's anything wrong with the loss, but that's what can happen sometimes with looser trails. But of course, they will have a lower win percentage, but they'll have higher R2Rs, because if you use the fractals as a trail, you get higher R2R potentials indeed. Not in this case though, but this is just one trade, so it's not, doesn't mean the whole world. Of course, logically it's just a trade, but yeah, that's that balance where both are profitable. It's just which one do you like more? Which one suits you better as a trader in general, right? That's always the question. So time-wise and from a trading psychology point of view. And yeah, the bulls remained in control until we got this bearish momentum again. It's really gone more sideways after that than anything. Let's take a look at the hourly. Yeah, I think we were looking at this piece down, so we got a piece of that, right? That's what we caught. After that, prices have gone sideways. So one way you could also optimize maybe whether you want to use a tighter or looser stop loss is looking at the hourly chart and saying, okay, there's a lot of momentum here, but if we look at the oscillator has been already riding, making this downside motion, although it's still below the zero line. It peaked already quite a long time ago and is making several of these humps like that. And this will be the fourth one. Then you know that that downside could bump into some trouble, because it's just has pushed so long already that a sideways consolidation like what we've seen is more likely. And then you might want to opt for a tighter stop loss. If prices, let's say, just peaked here with a very strong AO and we didn't even have a double dip like this, right? That's always kind of like almost quite usual. Then you might opt for a 50-minute looser trail stop loss, because the chances of some bigger downside momentum and for a bigger run are higher. So you can even vary that depending on your tools and indicators that you use, or this AO, for instance. That was one of the reasons that I used the tighter one, is indeed the lack of expected run. Now I cannot find, 1 second. Can't find it anymore. Let's see, where was that? Here. Oh, yeah. Alrighty, folks. Well, any questions maybe? Otherwise, I guess we'll wrap it up a bit earlier today. A dollar Swiss maybe still, that is actually that could be an example of a range in a way, but it's a bit of a funky range because of its two spikes here. Otherwise, it's making kind of more like a channel in a way. Very mild channel recently with a very flat top, though flat bottom as well. So that part could be viewed as a range. It's about halfway now. But obviously, if price does get back to the 90 level, to look for some wick there could be worthwhile. Same could hold true if price does get back to this bottom. Let's take a look at the CAD yen. Yeah, it does. I would wait at least for the top of this hour to see how that hourly looks like. CAD yen is bouncing indeed. The best is to look for hourly rejection. Like these wicks here, a group of these wicks, or here, that's something. So I wouldn't say indeed, just because price is getting here, I agree with you. I'd still want to wait a bit to see what kind of reaction there is, first of all. So I agree. If you want to be early, you could use the 15, but you might need a bit of patience with that. Hourly could be maybe a bit better in that regard. If the 15, however, let's say that the top gets broken here, that does happen. The one thing to look for is also this daily R1 region maybe. A rejection wick on the 15-minute chart plus a hook back of that 15 could be something, but yeah, I think the hourly is a bit more sturdy in this case. We can take a look at the CAD side and the yen side to see how this CAD yen is shaping up with regard to those. Dollar yen is moving up as expected, so that would mean, yeah, that would mean if the dollar yen starts to break to the upside out of this triangle, that would not be too good for the CAD yen side of things, even if the dollar CAD goes up. That seems quite flat at the moment. Yeah, I'll keep an eye on this dollar yen as well, besides the CAD yen, and wait for some hourly rejection first of all. Could break indeed. Definitely. Good point. If this does break and the hook back, might be worth it. Tight space today, but could be better space tomorrow. Pound's starting to move up a bit. Let's see. Kiwi moving down. So let's see if price can give that bounce on the Aussie and Kiwi. That could be interesting, as I said earlier today. If you get strong price action signals at an S3 on the Aussie or on the S2 on the Kiwis, most of them I think, at least the New Zealand dollar, then those could be interesting things to look for. Pound dollar would be interesting to see how that behaves at these resistances. Dollar yen too, if we get the breakouts. Euro out and pound out too, if we get some kind of reversal signals maybe. And Euro CAD maybe for a range environment. Yeah, that wraps it up, I guess. We'll talk about this tomorrow and other things, new things as well, with the Forex strategy webinar at the usual time. Thanks for joining us today. I don't see any questions, so I guess we'll close it a bit earlier. Here you can see, than usual, here you can see the webinars we have this week. Tomorrow we have Forex strategy, and in the evening, the expert opinion. So I hope to see you then, and wish you a good day. Cheers.